Hello everyone, I am Susie Lyon from Hello Switzerland, here to talk to you today about Volt, the Swiss investment app that has experts on hand to help you with your investing needs. When you first move to Switzerland, investing or your pension might not be the first thing on your mind. There's always so many things to do, like choose a school for your kids, decide what area to live and work in, or how to navigate the Swiss recycling system. Investing within a new country with rules and regulations you might not be aware of, or just knowing how to get started, it might leave you thinking investing is a part of your moving journey that can wait. But if you knew how easy it could be, you'd add it to your to-do list right from the start. Volt by Vontobel is designed to help you start investing confidently, irrespective of your financial skills. To give us that insight into the ways of investing in your retirement fund here in Switzerland, we will be chatting today to Fabian and Paolo from Vontobel, who run the app Volt. These guys have extensive experience in helping newly arrived expats, as well as established expats like myself, navigate the world of investing while living and working here in Switzerland. This webinar is brought to you by Hello Switzerland, and its aim is to answer the main questions you might have about investing your money with Volt. Stay tuned to hear about a special offer from Hello Switzerland, where you can benefit from using the Volt app for 3 months with no bank fees. Let's introduce the team from Volt, Fabian and Paolo.
Thank you, Susie. Thank you for giving us the opportunity to talk about our product, Volt. I'm Fabian. I'm the head of product at Digital Investing. And at Digital Investing, we're passionate to bring private banking quality investment solutions to our clients in a hybrid, so in a digital and in a physical way.
Awesome.
Thank you, Susie, also from my side, and thank you for hosting us today. My name is Paolo. I've been working for Vontobel for almost 2 years now as an investment manager in the discretionary solutions division. I am originally from Italy, so I can relate also to the situation since I moved here indeed a couple of years ago for this job. Today I will be provide you some insights on the investment side as an investment specialist. So let's start. Why investing makes sense, and most of all, why being disciplined on the market makes sense. We always ask a question when we are having these kind of presentations. So if you had invested 1,000 Swiss francs per month into the Swiss equity market as measured here by the Swiss Performance Index, the SPI, since 1987, how much would you have got up to today? So we have an investment length of around 35 years. The total capital invested, if you just add 1,000 each month, would be a bit more than 400K. Well, the result would be this one. You see the green line is indeed the performance of the SPI index, while the black line or black area on the bottom of the chart is your capital invested, which steadily increases. And the return, the total return of the market since 1987 would be indeed more than 1,300%. Your investment, which I remember you invested in total an amount of 422,000, will now be more than 2 million. In this chart, you can see what would be the your purchasing power, so the value of your portfolio if you just kept everything into cash. It's in three reference currencies, so in Swiss franc, US dollar, and euros. But you can see that no matter what kind of currency you were holding, in the end, after almost 20 years, you would have, in real terms, less than what you had at the beginning. How did you build this chart? Well, it's simply the return that you get from a nominal interest rate minus inflation. You know that as a rule of thumb, to calculate what is your real rate or real return out of an investment, you just subtract the inflation rate to the nominal interest rate. And this will be the result. You will be losing money over the long term. So, of course, you don't want this situation. You want your investment possibly to go up, or at least not to lose value. So that's why you should consider an investment. Investing, however, we see as a marathon, not as a sprint. It's a race to continue with the comparison, but it's not something that we see as a short-term thing. Rather, we always take a long-term point of view, a long-term horizon, and we believe that you can actually get the results over a substantial amount of years. Why we think this is important? Like, because market fluctuations are very frequent, and you don't always have the possibility to tackle them properly. So that's why a long-term horizon, a long-term view, we think it's more appropriate to achieve your goal. In this chart, we plot a comparison between two different kind of investor that we called Team and Emma. Team in green is always reacting to market fluctuations. So it means that every time the market, for example, falls, he sells, or he buys while, for example, the market is experiencing a strong run. Emma, on the other hand, is more disciplined despite market fluctuations. So she just stick with their investment, with their initial investment decision, and will just look at the result of their investment at the end of the period. So we just simulated how these two investors could react to different market conditions. They started actually in 2007 at the same level, investing $1,000, Swiss franc, you name it, each. And what happened a few months later? Well, we had the great financial crisis with the market collapsing, and you see Tim decided to sell his equity position. So was, of course, a bad decision. We can say it afterwards, clearly. But that will not be the only decision that Tim will take. Indeed, you see after some years, after roughly speaking 10 years, Tim decide again to take an action, and this time is the right one. He sells in September 18, right when the market is peaking, to then buy again, re-enter his investment at the market low a few months later. So this was a very good decision in the end, because he sold at the highest point and bought again at a lower level. Again, Tim made another good decision. Just before COVID-19, he decided to sell and rebuy after the COVID-19 low. So in the end, Tim was always acting according to market fluctuations, maybe also based on his emotions. His return, or at least his total value at the end of the period would be 1.7 thousand, roughly speaking. So he had a total return of 76%, which also, like, just by hearing this does not sound bad at all. So Emma, by the way, at the end of the period, who always stayed invested since 2007, had accumulated a total return of 156% for a total worth of their portfolio of 2,557, which is almost the double of what Tim has achieved. So you see, Tim in the end was also taking right decisions, selling at the highest point and buying at the low, but this did not work out in the end just because of one single mistake that he made at the beginning. While on the other hand, Emma, who stayed invested since the beginning of the period till the very end, got substantially higher results. So this is a bit the flavor that we want we believe for in investments for the long term. In this chart, we show the total return of the S&P 500 index, so basically the US stock market between 1999 and 2022. So on a period of a bit more than 20 years, you can see that if you stayed invested since the beginning to the end, you would have got a total return of 450%. If you missed just the 10 best days during this period, your total return would be substantially lower, 152%. And if you keep on missing some days, you see that it declines, but at a lower pace. Drawdowns, on the other hand, are less likely than what you might think. So drawdowns were periods of negative returns. Yes, they are of course present in the markets. It's not like your investments always go up, but there is a misperception about it. Why is that? Well, because usually you do not hear in the news, or at least you do not pay too much attention in periods of, say, relative calm in the markets. While when we are experiencing a market crash, then of course you hear a lot of news. You also get worried, of course, because it's your money in the end which are directly involved. So you tend to overestimate the likelihood of a drawdown in the market. But you see that actually more than half of the drawdowns are just quite limited. So they are just up to a -5% return. Extreme cases where you get to lose, let's say, more than 30% of your portfolio are quite limited and not even reaching the 10% of the occasions. So just to sum up briefly, why we believe that stay invested could be the right choice for your investment, for your personal finances. Well, we've identified a few key takeaways. First of all, what we were mentioning at the beginning of the presentation, compounding can increase investment return. Second point, timing the market can be dangerous. Of course, it's always hard to tell when, for example, you took an investment decision because of your skills, of your market analysis, or on the other hand, just maybe because you have been lucky or unlucky on that specific occasions. Drawdowns could be a normality and not a risk. So as was mentioned before, drawdowns can happen. You can have, and you actually have to expect also negative returns in the portfolio, but we do not really see it as a risk for your investment if everything was set up in the right way and if you stick with your goals. Diversification can reduce investment risk, of course, and that's why also, for example, with Volt, you can have the possibility to invest in a wide range of instruments, geographical areas, sectors, and also through thematic investments. And finally, possibly do not hesitate. The beginning of stay invested, so of course your day one or day zero would be actually when you take the decision to make a plan for yourself, for your personal finance, and set up an investment strategy for you.
Thank you, Paolo. Now that we know that staying invested or starting to invest is quite important, let me guide you a little bit through the app. As we said before, we think staying invested or starting to invest is absolute key, but no matter what, we've put quite some emphasis on making that whole process easy, so you don't have to take your decision to invest and invest into what. You don't have to take that decision up front. There is an easy, soft way to get into the application. So when you download the app, the first thing you will see is the Volt Investment Coach. It's actually a contextual helper, so the investment coach will help you through certain questions, will explain why we ask certain questions inside of the app and give you additional information, but also acts as a link to our investment advices if you have ongoing questions. So the first thing we want of you is not a big 40-50 screen onboarding. It's just a teeny tiny registration. So you're giving us your name, email address, phone number, and then we send you a code via SMS. So we're hardening your device, that is called. And then you're already set to be part of the member zone. And the member zone for us is a place where new members come in and are able to read investment news from our side, are able to read how our CIO sees the current world, but also give you some hints on how the app is working, introduction videos, and so on. So it's a first point to settle and actually start reading and consuming the investment knowledge of Vontobel. At that point, when you decide that you understood what we tell you there and you want to start to jump into a portfolio, first important thing here to mention, so I'm having it here on screen 4, is Hello Switzerland has a special promo code. And when you start your investment journey, when you start building your portfolio, the first thing which we will ask you is actually that promo code, and there you could enter these HS22 as a promo code. This will be mentioned in other places too, but important thing, add it there. Then the next thing we're going to do is actually doing a small risk profile of you. So we need to know how your risk tolerance and your behavior in risky situations works. So there is where the investment coach comes into play the first time, explaining you what risk capacity is, how we actually profile you into these different risk profiles. And then you're already in the juicy part. So I always say it's a little bit like an e-commerce journey where you first fill your shopping cart with the investments you want, and then the checkout, the actual, signing the contracts and all this kind of stuff comes later. So first you can play around with the different investment options. So in that situation here, you see that we ask you if you're rather into a expert portfolio or if you want to build a completely individual one. So completely individual meaning on a set of options. Here in this case, I've selected the expert section. Then we have 3 expert portfolio, the basic, the global trends, and the select portfolio, which all having different options in there. So the global trends is more into mega trends and the global equity allocation. The select is more into alternative investments and a Swiss bias. I'll come to that a little bit later. But there are basically pre-selected kind of expert portfolios. And then you see something which I would call the shopping cart all the time. So that's the thing you see here in the middle, which always displays you what kind of things you're already selected into your portfolios. In this case, I have a growth strategy. I'm having a Switzerland-focused portfolio. I don't have any investment themes. I'll come to that later. And I have 4 different alternative investments inside. Now in this example, I've decided that growth is potentially not risky enough for me. So I've entered into that section and chosen a dynamic strategy, which has even more stocks, more equity inside of the allocation. But you obviously could also choose to have a less risky strategy at that point. I've also chosen to not go Switzerland focused, even if we're talking here about Hello Switzerland, but you could still decide to go into a more global focused allocation. So this is what you see here on the right side. If you can see my cursor, you could also choose to go into a more Europe focused allocation. So these are some of the flavors you can actually choose during that journey. Next thing, big topic for us is the investment themes. So you can choose to invest more into different areas like energy revolution, gaming and esports, dividend achievers, disruptors, next generation brands, and so on. We're having 17 different themes you can add into that portfolio. Exactly, I would say the conviction or also your future-looking expectations to the markets you can reflect inside of that part. And then, given that, so you see here on the right side, I'm having a dynamic strategy, globally allocated. I've added Swiss equities, dividend achievers, and opportunities to the portfolio. You can obviously read about all these different themes to understand what's in there. You could also add, for diversification reason, you could also add alternative investments. That means gold, real estate, commodities, and hedge funds, which also gives you a proportion of investing into different areas. So some of you may know gold or real estate. They were quite crisis relevant or perform quite well during crisis, and that should give your portfolio more diversification. So after you've done that, after you basically filled your shopping cart with the different investment, that obviously takes a little bit longer than I can explain now here, but that's a part of the journey that you also spend a lot more time on Amazon or something like that until you have your shopping cart. But then when you are sure that you want to continue with that, you can actually jump then into the more administrative things, which we call the KYC and the personal information. So this is where the actual onboarding happens. It's all digital, so you don't have to be, you don't have video calls or something like that. But you obviously have to enter a certain set of informations like birth date, name, and so on, address, so we can actually make sure that you have a Swiss domicile at that point. There are certain, I would say, compliance questions like political activity and so on, which we have to check. The regulator tells us to do that. But then when you've done that, we go into the so-called digital identification, where you can use your passport scanning and make some 3D selfies, and there is an artificial intelligence behind it which compares these things. But you can use this kind of onboarding anytime, 24/7, Sunday afternoon, on your couch, no hassle, no need to talk to anybody, so you can do that fully digital at home to actually onboard yourself. No matter what, once again, if you would decide during that process that goes too fast, I don't know, I just want to understand how things work and so on even more. We have built in a thing what we call the virtual portfolio. So the thing you just built before, that shopping cart portfolio you just built before, if you would stop that process, the portfolio would just start ticking. So that means we're going to transfer you 100,000 Swiss francs as Mickey Mouse money, I would say, and then you can actually feel and experience how the portfolio behaves. So the performance, you can change things, you can remove themes, add other, I don't know, remove gold, add real estate, whatever you want to do over the time. You can change your equity focus and actually see how that portfolio behaves over time. And once again, we do that because we know investing is quite a complex thing. You know, it's not so easy to feel safe with the portfolio I've just built. So for us, that's a really important feature to give you a good feeling about what you have just built inside of that portfolio. No matter what, obviously, we said it before, stay invested or start investing. It makes sense then to go on and invest into the portfolio. So if you continue into the whole contract part after that, your portfolio will be invested exactly like you have built it before. The whole contract part is quite short, so once again, fully digital. You get sent some ton via SMS, and then you can do some click and swipe, and then you have actually signed the banking contracts and the product contracts. Once again, a few seconds, and then it's done. And then obviously you're then inside of the what we call client zone. So before you were in the member zone, now you are a client of Vontobel because you've signed these contracts. You are now in the client zone, and there are now multiple ways on how you can invest. One way is what I'm showing you here. So you can move money from an outside bank account to Vontobel, and in this case, you can either move it directly to your portfolio, then it will be directly invested, so no delay in between, or once again, for people who want to take it a little bit slower, you can move the money to what we call Volt Cash, which is a very simple cash account where you can move money to, and then with just one swipe actually transfer money from Volt Cash into the actual investment portfolio. So this is exactly what you see here. So I've transferred 30K of Swiss francs into Volt Cash here. Okay, if you can see my pointer. And then here I just use one swipe to transfer 25,500 francs, why ever, that much, into the actual investment portfolio. Now over time, when that portfolio develops and so on, so you see this is actually my portfolio. Doesn't look brilliant at the moment. There are times where markets are better and times where markets are worse, but no matter what, Paulo said it, stay invested. You can always, and that's an important thing, you can always change. So you can always change your strategy, you can change the regional bias. So if you want to switch from global then still to Switzerland, you can do that. You can add or remove themes, you can add or remove alternative investments. All the time, you can just take that decisions by a click, but you don't actually have to implement it yourself. So it's I always compare it, it's like you tell us what you want to eat and we cook. It's not that you have to cook yourself, which is normally the classic case when you have a classic trading account. Then we have something like a level system. So there are starter, gold, and emerald. Starter is everybody below 100,000 Swiss franc of investment. Gold is above 100,000. Emerald is from 500,000 onwards. And depending on these different stages, you get into different service levels. So on the Emerald level, you even have a specific investment advisor just for yourself. On the gold level, you get sent the physical vault package and so on. Check it in the app, but there are a set of different perks you get depending on the investment level. Quite important, people were asking, okay, what am I really investing into? So you can always drill down, you don't have to, because you know, as much information as you want, but you can always drill down. So how am I really invested? So you can see that here in this example that the Megatrend fund is invested into Alphabet, Amazon, and so on. These things are actively managed. So that means over time, these experts, which you also see here, so this is Daniel Meyer who is responsible for that, or Jonathan who is responsible for the Equities USA part. These people are actively managing these parts of your portfolio. So it's not a fire and forget solution. So it's ongoing management of these different parts, and you can always drill into it, and you always get also a news article if we do significant changes. So here on the right side, you see that there was a significant transaction in the e-commerce investment theme, where some things inside of that investment theme were actually changed over time. So it's quite important for us. You can even see which one of these 300 experts inside of the bank is actually responsible for which part of your portfolio. You don't have to, but if you're interested in, you can drill down and have a look. I think this is quite important. I've already mentioned that. Obviously, we don't have to go into detail. We have different regional focuses. Obviously, we're having different strategies which give you different exposure to different asset classes. And the main thing here is that it increases your equity proportion over time. So if you're a defensive investor, you have a lower exposure to equities than if you're a dynamic investor. Now, I've already mentioned the Volt Access part, so the levels we're having. In terms of the exclusive conditions for Hello Switzerland members, it was already mentioned before. We're having these 3 months without bank fees, which you get when you enter the promo code, the HAS22 promo code. But additionally, the more you invest, the lower the fees get. That's just part of the efficiency which we basically give to you back. So up to 100,000 Swiss francs, we're having 96 basis points, from 100,000, 85, and then 80 basis points from 500,000 Swiss francs. The product costs, so the costs which are inside of the products, they can vary because you can have different products inside of your portfolio depending on what you've selected before. They're normally between 38 and 60 basis points, so 0.38 or 0.6% of fee. So you're ending up normally roughly at around 140 basis points of fees. And to us, at least, we think this is quite a competitive offer to once again a fully actively managed discretionary mandate with 300 experts behind the app. Now, mentioned before, we are Vontobel. So we're not a startup. We're not having a machine behind all these things. We're actually having people behind the app. So at any point in time, when you have questions during the onboarding, when you have questions about investing, when you want to do a financial checkup, whatever questions you have, we're having a team of professional investment advisors and client success managers behind the scenes. So you can always get in contact with them, book a meeting with them to get some advice from their side. So do not hesitate to contact us if you have questions and so on. And we really believe in that hybrid model, so that there are things where you don't have to run into a bank, but there are also things where it makes sense that you call us and discuss it with us. Good. Summary. You can choose between 5 investment strategies. You can choose themes, alternative investments, regional focuses. Obviously, just tailor the portfolio you want. Hello Switzerland members profit from exclusive conditions. Mentioned 3 months without bank fees from the point on where you start investing. And with the Volt 3A, so our pension-oriented product, you can invest into your pension assets inside of the same app. So you don't have to download something additionally. It's all inside the same app. Good. I guess that's it. And we should jump into the questions.
Thank you. Thank you very much to both of you for that very detailed information. Thank you. So now that we know a little bit more about Volt, let's get a little bit more information from Fabian and Paolo. So knowing where to begin is a big part of investing. And as a newbie myself, I'm wondering if this is something that I'm able to do with the Volt app. So what would be the requirements with Volt? You did touch on it a little bit when you discussed the app and how to download it and register. Let's just talk a little bit. What is actually required when I start to invest with Volt?
Yes, so I think the core requirements is that you have a Swiss domicile, which is obviously given with expats. And the second thing is that for the Volt Invest, so the investment product I just shown you, that the technical minimum invest is 10,000 Swiss francs. And the recommended minimum invest out of efficiency reasons is 25,000 Swiss francs. So I think these are actually the main requirements, as you need a mobile because it's a mobile app. So I also think that is often given, but the rest, just jump into it and go through the journey.
Awesome. Okay, so some people watching, they might be wondering if they can have multiple currencies, dollars, Swiss francs, euros, or even if they could have maybe multiple portfolios, those ones that you showed us, maybe something for a loved one, like a gift for a grandchild, something like that. So, am I able to tailor those portfolios to my specific needs? Can I have multiple portfolios with different settings?
You can have as many portfolios as you want. And each of them you can tailor again, as you've seen through that portfolio builder, you can tailor them again. So you can add a second portfolio and there you add only alternatives, and then you add a third portfolio where you go quite conservative but add 3 themes to it and so on. So you can mix and match these kind of options into multiple portfolios as you want. And we often see clients doing that as, preparing a portfolio for a, let's say, a godson. Probably gives you a longer investment horizon, also gives you the opportunity to invest into a little bit more risky strategy than when you do that for yourself.
Yeah, very interesting. So, Paolo, my husband and I are on completely different spectrums when it comes to risk taking. I'm a little bit more, willing to take risks. My husband is a little risk averse. So, I know that he would be watching this saying, well, is my money safe? And what happens as an expat when I leave Switzerland? Where is that money going?
Well, this is, of course, a very important question. In the end, we are talking about your personal money, your personal finance that you worked a lot to get. So, of course, you want to be on the safe side also when it comes to investments. Volt is an app made by Vontobel, so it is professionally managed, and most of all, it leverages on the expertise and skills of a Swiss private bank with years and years of experience. Behind the app itself, there is a team of experts and investment specialists, of hundreds of them, who of course will support and take care of every single aspect. So on that side, sure, you can be safe. Your money will be safe. Of course, we are talking about an investment, so you will be exposed to investment risk, market risk, and market fluctuation. That's something that you will have to consider. But the risk assessment that Fabian was mentioning, that is carried on at the beginning when you set up the app, is something that will help you understand your risk appetite, how much risk you can bear, and will help you in set up the correct investment strategy for you. The second part of your question was what happens in case you will live in Switzerland, right? So Volt is made specifically for people who are domiciled in Switzerland. So this is, of course, a necessary condition in order to use the service. In case you leave the country, then we will have to offboard you. On the specific ways this will happen, then it will depend, of course, on a lot of different factors, like, for example, your portfolio, to which country you will be relocating. So on this specific aspect, it will be better to discuss directly with one of our investment experts, who will help you to figure out what will be the most optimal exit way.
That leads me to my next question, which I think is super important. A lot of these apps these days, they can be kind of feel like they're controlled by bots and generated responses that don't feel very personal. But, if you are leaving Switzerland, it does depend, on your personal situation, doesn't it? So it does help to have somebody you can speak to, about your money. This is something that Volt offers, correct?
That's absolutely correct, yes. So, and it is also quite important to us that this is mentioned, that there are people behind the app. The channel is digital, but there are people which manage your money behind the scenes. And if you have questions, that's the most important part. If you have questions about your financial situation, about the different investments and so on, you can just call someone. You can, make a meeting appointment on having a meeting with someone, with a professional investment advisor from Vontobel, and discuss your matters in a personal way. And that's, I think, quite unique here in Switzerland, and we also really put emphasis on that.
Yeah, I think that is a great point that you have with Volt, because I don't like bots. I like to be able to speak to somebody, especially something that I might not know a lot of information about, like having someone there who knows what they're talking about and can reassure me and make me feel at ease with with my money and where it is. That's a great asset that you guys have.
Also specifically, to the different investment building blocks you have inside of your portfolio. As I mentioned, you can even see inside of the app who that actually is, and read a short bio and see that these people are now working 15 years for Vontobel, and they know their business. Obviously, you are exposed to markets. That's part of the game, but there are professionals behind the scenes working on these building blocks.
Great. So let's talk about Pillar 3. We mentioned it briefly at the end there. So when I came to Switzerland, when Pillar 3A was mentioned to me, it literally sent my head into a spin. I had no idea what it was all about. And it actually took me many years of living here before I invested in my own Pillar 3A. So let's talk about that just for a second. I do have one now, so I do know what they are, but let's just, for anyone watching, let's just discuss what a Pillar 3A is.
So you basically have three pillars, in terms of pension here in Switzerland, because it seems to be a really important thing for Swiss people, and it is a really important thing. So there is the first pillar, which is mainly state-driven, which is mandatory, the AHV. Then there is the second pillar, which is also mandatory, which you and the company you work for pay into. And then there is the third pillar, which is not mandatory, but still, as the other two pillars too, it's tax efficient. So you won't pay taxes on the money you put in that third pillar. But on the other hand, obviously, because as you could do lots of tax optimizing, I would say, it's capped. So there is a certain amount. Currently, I think it's 6,883 francs you can put into that every year, depending a little bit on different things. But it's highly advised to actually do that, because inside of that third pillar solution, it is also invested. It's not as flexible as the dynamic portfolio builder you've just seen inside of the demo. But still, you can choose an investment strategy, and it will be invested into the same professional building blocks, but according to that a little bit more regulatory, I would say, rigid structures. But still, you can put that money in there. It will be invested into the financial markets, so you can get additional returns from that, and it is tax efficient. So it's from a Swiss perspective, it's quite a no-brainer, to be honest.
Around tax time, I get a lot of posts, and it's all these tax certificates, and I have to keep note of them and make sure I put them somewhere safe. And I'm assuming that if you invest with Volt, then obviously that's going to be the case as well. So how do you guys deal with the tax certificate?
Sure. With Volt, you will also benefit from the easiness of having all the documents that you need for your tax declaration in an easy, efficient way. So you will automatically get through the app tax certificate and tax documents that you will able then to use to attach to your tax declaration form. We know that it's of course not something that people are willing too happy to do, because of course every year it's just a pain to collect information. That's why we wanted to try to keep it as easy and efficient as possible, still by keeping all the high quality standards that you can expect from a Swiss private bank like Vontobel. So you will get all the information that you need in those documents, which will be then ready to use and available to you.
So I think we have managed to cover the basics and more today with Fabian and Paolo, and I can safely say that we have a better understanding of how to invest, what a Pillar 3A is, and how having one is a benefit. All of this is possible through the app Volt, and if you are interested in giving Volt a try, you can benefit from using the app for 3 months with no bank fees. So download the app today and use the promo code HS22 to benefit from this deal from Hello Switzerland and Volt. So thank you to Fabian and Paolo for their expertise. From me and Hello Switzerland, thank you for watching.